Hi everyone, welcome to the new episode of Yotewo podcast. And today we have a new guest, Mariam Makhmutova from InterSystems VC. Thanks so much for coming. First of all, it's an honor to have you here as a guest. Maybe let's start with a bit of background, a bit of introduction on yourself and what do you do?
Yeah, sure. Excited for this. My name is Mariam. I work for InterSystems Venture Fund. We are essentially a CVC, and we invest across health tech, which is sort of the majority of our portfolio, as well as fintech, AI, and supply chain. I actually came to this through sort of more operational backgrounds, working with startups, working for the investment infrastructure.
Yeah.
So it's been an interesting journey, but
Okay.
now being on the investment side. Although we will talk about sort of how
Yeah.
corporate VCs are different from
For sure.
from the classical
For
ones.
sure, of course. Yeah, actually, my next one is about. So I checked your LinkedIn. I checked everything I could find. So you have quite a track record. So you have Baby VC in the career. You have Raw Ventures, Flow, now InterSystems. Maybe can you share about what drew you into the VC world in general? You mentioned the operational side. Maybe if you can elaborate on that.
Yeah, sure. I think it was a very natural journey. It's not that I was at the university and I was like, oh my God, I want to work for venture capital.
Okay.
I don't think I knew what it is at the time.
Okay.
But I was really drawn to tech, and coming from from a non-scientific, non-technical background, it was a way for me to always keep learning new things
Yeah.
that are very exciting, as well as working alongside super visionaries, sometimes even crazy founders who are so ambitious, forward-looking, outgoing. Like, it was so much fun.
Yeah.
So it was sort of the combination of that, but also a health tech side of it, because
Okay.
always as a hobby, I was like, I'm super interested in health, sort of as a personal well-being, and then that interest grew so much bigger. And as a result of that, sort of my experience, if you look at the startups that I used to work with,
Yeah.
they are health tech, biotech, spanning healthy aging, genetics, microbiome.
Nice.
And it was just exciting, and I felt like I could bring something to the table from the perspective of operations, business development, strategy.
Cool.
But then moving on, like, it was very operational, very hands-on, working sort of at the pre-seed stage where you
Yeah.
do a little bit of everything,
Yeah.
and no sort of single day looks the same.
Yeah.
Which is kind of crazy, and it's so exciting.
Yeah.
I feel like people working with startups sort of underestimate how fun it
Yeah.
actually
That's
is.
true. How unpredicted. Yeah.
Exactly. And there's so much that can change over a day. Like, you can sign a new client or identify a new partnership. Like, it's
Exactly.
super exciting. But then we started raising,
Okay.
and it was 2023.
Okay.
So it wasn't the best
Yeah.
time in the VC world to
Yeah,
raise.
exactly.
And my focus shifted to that. And that was sort of learning fundraising, learning what venture capital is, bottom up.
Yeah.
So I was responsible for things such as building a data room, looking at competitors, trying to figure out the valuation. Obviously,
Okay.
we were all doing it with the co-founders, and
Yeah.
it is sort of the team that I used to work with is
Yeah.
absolutely amazing. We still keep in touch. Like, I keep
Nice.
in touch with sort of all the people that I've
That's cool.
worked, which again, like, I really appreciate sort of them being for me in my
Yeah.
career. And I was like, okay, VC looks actually so much fun, because
Yeah.
you can learn about not one thing, but many things.
Yeah. Of course.
And then I did so Baby VC is it's a community, it's a fellowship
Yeah.
that allows you to meet folks from Early Birds, Crane, like all
Yeah.
of those big names, very reputable VC firms. So for me,
Cool.
it was about sort of testing the hypothesis, if it's
Okay.
something that I want to commit.
Okay.
And that proved positive.
Nice. Nice. Amazing. And the startup that you were doing was in health tech as well, or was it something?
Yeah, it was sort of it was the infrastructure layer in the biotech space. So the solution evolved around secure data collaboration in genomics without data disclosure.
Okay. Interesting. And your background, was it related to medical stuff or no?
No, not at
No?
all. Well, although, so I did my master's in international health management, and
Okay,
again,
so
that was part of the
yeah.
journey, you know.
Okay, a little bit. Yeah, nice. Okay, that's interesting because I didn't know it, so it's super interesting to know. Okay, so it's quite a journey. Now you are investment associate, right, at InterSystems. So essentially, you lead deals from scouting to closing. Maybe can you share like number one thing that you look out for in founders when they come to you? Like, what's this one thing that you assess them, based on?
Yeah, sure. I mean, it's difficult to pinpoint just one, and it's
Yeah,
probably going to sound very vanilla, but it is true that it is passion, you know.
passion. Okay.
I would probably, I'd probably add two other things
Yeah.
because again,
Yeah.
it's
Yeah. Of
it's
course, go on.
difficult to focus on one.
Yeah.
But founders like. Let's look at it this way. You are doing 10 jobs as one person.
Sure.
You are HR, strategy, finance, business
Yeah.
development, tech. Like,
Everything.
it's painful.
Sure.
So you have to be really passionate about it in order to succeed in this. So dreaming big, like being very ambitious about it is important. But at the same time, it is a balance of being ambitious, yet very realistic in planning,
Yeah.
open-mindedness as well. But yeah, and that would be actually the second thing is you gotta be like strategic
Yeah.
because you don't have many resources. You can't do many things at the same time. You really need to like plan things ahead in
Exactly.
order for it to make sense, like to hit that product market validation,
Yeah.
to start generating revenue, things like this.
Yeah.
So it's really important to be focused, and founders who exhibit the qualities that relate to realism, pragmatism sometimes.
Nice.
Yeah, that would be super important. But also being open-minded because you build the company with people for people, no matter what
Yeah.
the sector is.
Yeah.
So being open to ideas, being open to feedback,
Yeah.
staying humble, because there's this sort of
Of course.
there's this inflection point where you are ambitious, but then it can fall down to
Yeah,
arrogance, you
of
know?
course. Yeah, you stay humble.
Yeah.
100%. And is it something that you see like from the very beginning in people when they just come to the first call, or is it something you like kind of like opens up over time?
I would say that I'm a big believer that you can't make the first impression twice.
Yeah.
And during the first call, all right, so before the first call, you see the deck, right? And the
Yeah.
deck has to be ambitious. Like it has to be big, it has to be catchy, because the point of the pitch deck is not to raise the round, it's to get on the call.
Yeah, yeah.
Exactly. So that's sort of, and when you are looking at several pitch decks a day, something has to stand out
course.
about it.
Yeah.
But then when you get on the call, you see that founders or a single founder, they are like, they understand how to get from point A to B, and like they have this planned out, and they're also not shying away from talking things that they still haven't figured out yet, which
Yeah.
is also fine because VC is smart capital,
Yeah.
and you're aligning yourself with an investor who can help you out.
Of course. Yeah. Not only with money, but with actual
Exactly.
smart money. Yeah.
Yeah,
Okay. So it's something. So the first impression is actually important. Yeah.
for sure.
Yeah.
For sure.
Okay.
Because again, you are so. InterSystems Corporate Venture Fund, we look at companies from pre-seed to late seed.
Yeah.
Anything up to and including Series A is early stage, right?
Yeah.
It's only Series B onwards,
Yeah,
actually,
when it's
that is
actually-
considered a
Yeah.
growth
Yeah.
stage.
Exactly.
So you're still, although obviously there are much more metrics to assess when you're seed and late seed,
Yeah.
you're still investing in
growing.
people,
Yeah. Yeah.
right?
Of course.
So if you don't really connect, if you cannot
Yeah. It's not gonna
align,
work. Yeah.
so yeah, and the first impression kind of
sense,
gives
yeah.
it out, yeah.
Of course, yeah. Okay, and what about the red flags? Are there any red flags that you notice in people like right away?
It's a great question. And interesting that you ask that, because it's actually after I look at the pitch deck and we have an intro call,
Yeah.
how I would assess startups is I would actually like list red flags and green flags,
Okay.
to make a structure
Yeah.
about it a little, just so that I understand and I remember and I don't sort of get hooked up on a single green flag or a single red
Yeah.
flag. So I try to structure it accordingly.
Okay.
I would say not to repeat myself about sort of the points on
Passion. Yeah.
passion and arrogance. I would say red flags would be overambition and
Okay.
overconfidence, although it is linked to what I just said. But let me give you an example.
Yeah.
Recently, I was speaking to the founder, and they were like, "Yeah, we're gonna hit 1 million ARR by late 2025." I'm like, "All right, we are almost in the second half. How
Yeah.
much do you have?"
Exactly. How much do they have?
0.
Oh, okay.
And I was like,
That's-
okay, you can, like, you're selling to big guys, like to B2B,
Yeah.
like big corporations. So, like, you might land a deal like this. But I
Yeah.
was like, but how does your sales pipeline
Yeah. What's
look
the
like?
strategy? Yeah. Exactly.
Like if you're expecting to reach a lot of revenue in a very short time, your sales pipeline must be bursting.
Exactly.
You
Yeah.
you have some LOIs, or you
Of
have some
course.
pilots, or even the top end of the funnel is full.
Of course.
So it is those kind of things, and you can, like, I think you learn with experience, and it's definitely sort of through making mistakes when I didn't know the right questions
Yeah.
that I needed to ask. Like you learn, like, for example, about
Yeah.
the sales pipeline, right?
Of course. Yeah.
So yeah, the red flag would be this. And honestly, another one which I think I've heard many times
Yeah.
investors talking about is lack of competition.
When
If
they
you
say like there are no competitors.
that either that
Yeah.
or if you're like being dismissive of your competitors, that they are
Yeah.
much worse than you or they don't understand
Yeah.
something, that's to the point of being humble, because you can
Yeah.
actually learn a lot from your
From them. Yeah. Of
competitors.
course.
And it's okay to copycat something, because like
course.
they might have again
Yeah. Some good
achieved
stuff. Yeah.
exactly.
Of course.
But if you're saying that there are no competitors, that raises the question if there's a market for it.
Yeah. Yeah. Of course.
Because again, the presence of competitors,
Yeah.
maybe in other geographies,
Yeah.
or like
Other vertical. Yeah. Yeah.
exactly shows that there is demand for it.
Exactly.
And it's
That's a
super
good one.
important, because it's like Peter Thiel 101, right? Like you look at the team and specifically the ability to execute,
Yeah.
along with being visionary.
Yeah.
Market size. Is it big
I was
enough?
just about to say about that. Yeah.
Yeah. And the third one is, technological edge. Like, what's the
Yeah.
innovative about it?
Yeah, exactly. Yeah, about the market size, I always also tell people that like a lot of people send me decks as well just to like kind of like get advice on stuff, and I always tell them that like like a lot of them they don't have exact numbers about the market size and like the breakdown of like what's the achievable percentage, the classic stuff, and I think that's super important because when you actually understand like how big is the market, what do you need to get to that, like some percentage of that market, that's like that makes life super easy. And when founders don't know it, it's a bit sketchy.
And it's a very common mistake to make, actually. It is, sadly, it is very often that I see very poor sort of implementation of market sizing. And honestly, I've done that many times. Like,
Yeah.
market sizing is painful.
Yeah.
Like, you can't get away with only using secondary data if you want to be specific. Obtaining primary data obviously takes time.
Of course.
And then, like, okay, you achieve total addressable market, but actually that number doesn't say much. Like,
Of
whether
course,
it's 50 billion or 500 billion, all right, no,
Doesn't
that's
say much,
important.
yeah.
But actually how you narrow it down,
Yeah.
like, that's the most interesting part. But it's super, like, it's not only for the sake of the pitch deck, right? Like, that
Yeah.
then translates into your go-to-market strategy.
Exactly. Yeah. I just came up with one more question on the go-to-market strategy. Would you say like when the founders have knowledge about how they're actually gonna like enter the market and they have some specific ways, their own ways to enter the market, would you consider it as like additional USP for the startup or not really? when it
Oh,
has to be
I
creative?
would say it's basics. It's a
Yeah.
must-have,
Okay.
because usually you are building in the sector that you know something about, right? Whether it's or you have some experience, relevant experience.
Of course.
Like myself, not being like a doctor, I wouldn't tell doctors how to treat people, you
Of
know?
course. Yeah.
So if so yeah, let's take it as an assumption, like you have relevant background, you
Yeah.
have relevant expertise.
Yeah.
That means you have connections and you understand how selling into this market
Penetrate
should
the market.
happen.
Yeah.
Yeah, so I would say that if you don't know, you go to market. You don't have to know it like to the
Very
precise
detailed. Yeah.
detail, but then you need to have an understanding how to sell it.
Yeah.
And even with the financial modeling, for example, which is another
Yeah.
sort
Pain
of
point. Yeah.
yeah, another pain point for sure. Like if a financial model for a pre-seed startup lasts a week,
Yeah.
my congratulations.
Of course.
Like
Yeah.
it's not the numbers that matter.
Yeah.
Although again, because you look at different financial models, you kind of benchmark, like
Yeah.
like how founders
Yeah.
approach it, and it's the assumptions.
Yeah.
So, for example, it doesn't have to be big or complicated,
Yeah.
but I'd rather go for scenario-based financial model,
Exactly.
you
Yeah.
know?
100%. Yeah, no, that totally makes sense. That's a great one. Okay. So I checked also a little bit on the InterSystems. So they invest mainly in like three verticals in health tech, supply chain, and fintech. Those are pretty interesting ones. Is there any particular one that you're personally most interested in?
Yeah, there is a fourth one which covers sort of the umbrella of Gen AI,
Okay. I need to
because
improve my search.
it's fine.
Yeah.
So it is health tech,
Okay.
and it is sort of the majority of our portfolio, simply because InterSystems has a great presence in the healthcare space around the world,
Okay.
and we serve guys like pharma, hospitals, EHR systems. So for me, and with my background, it is a
Of
perfect
course.
alignment.
Okay, interesting. That's great. Then the next question is pretty generic. What is it that one thing that you think a lot of founders they misunderstand about VCs when they come to us? Is there such a thing?
Yeah, a lot of the time there is, well, something that we sort of slightly touched upon is an understanding that venture capital is not only about money.
Yeah.
And it's actually one of the things that, again, drew me to this sector, that venture capital as an asset class
Yeah.
is very young.
Yeah.
It's sort of, if we go back to history, and there is a great book on that, which is basically a bunch of stories, and it's an easy read. It's called Power Law.
Power law. Okay.
Power Law, which is basically what VCs is trying to achieve, is, let's
Yeah.
say you invest in 10 companies, 8 of them fail, one is
Yeah.
doing okay, and the other one returns the whole
Yeah.
fund,
Yeah.
you know, like a
Exactly.
very broad generalization.
Yeah.
But it talks about how VC, again, was how it emerged and how it was transitioning through different,
Yeah.
well, stages, tech bubbles, you know.
Yeah.
And basically it emerged in like 60s, I would say late
Okay.
60s
Pretty
in
young. Yeah.
around Silicon Valley. And we are seeing sort of every decade, even probably even faster right now,
Yeah.
we are seeing how it changes. For example, look at the valuations and what happened
Of
to
course.
them
Yeah.
in the last 3 years, right?
Of course.
It was the same during the dot-com crisis. So
Yeah.
it is a very dynamic class,
Yeah.
and it is smart money in a way where you are selling part of your company.
Yeah.
So it is sort of shared responsibility, and you are aligning and you're connecting together
Yeah.
to achieve something cool and big. So you should not be looking only for that ticket size in order to
Yeah.
burn that,
Of
essentially.
course. Yeah.
You are combining it with expertise, with
Network.
networks,
Yeah.
etc.
Okay.
And one other thing about VC is it is private capital, right?
Yeah.
And you invest in people, not all of the data. It's a big gamble. It's high stakes, like high
Of
risk,
course.
high reward.
Yeah.
And you need to be really conscious about that. And from the VC perspective, I mean, there is a misunderstanding as well that VCs are bad guys.
Yeah. Yeah. That's
I really don't like this stereotype, to be honest.
Yeah.
And again, it probably has arisen because of the fact that VC as an industry has grown, right? Like there are
Yeah.
more VCs than ever right now,
Of course.
despite the valuations, and the capital is
Exactly.
still
Yeah.
out there. And VCs are perceived as bad guys because they want to get sort of the lowest price for the highest
Yeah. Of
stake.
course. Yeah.
We can take them away because probably they don't know what they are doing, right? The purpose of the VC is actually to support you on that growth.
Exactly. Yeah.
And a lot of the people who, for example, angels or family offices, it is the way of diversification of assets.
Yeah.
But it's also because it's a fun thing to do, right?
Of course.
And angels, for example, if you can raise money without VCs, but use angels, I would say do that.
Yeah.
And it's actually, I was doing a panel discussion a couple of months ago, and I heard that from a VC.
Okay.
He was like, guys, don't raise from me. Like, if you can raise from angels, do that, because they are very well. We can like debate. Like it's a broad statement.
Yeah.
But angels, for example, can be very switched on.
Of course. Yeah. That's true.
So it's useful.
Interesting. Yeah. Well, it's interesting. Yeah, because we initially when we just started, we also had this, like misunderstanding in the head that VCs are like super, cautious guys that will probably be super strict, who will be like limiting you. And we tried to go into angels, but for us it didn't work. Like for us, we talked to angels, but our industry is like pretty cold, in terms of like, it's not too fun for angels, and we ended up going to VCs, and we were like super happy about it because we got the right people in. So 100%.
Yeah, you've got amazing people in. Yeah, for sure. But it's also raising from angels can be quite tiring. Like it's if you know angels, like that's really good. But actually,
if you don't know them, that's the problem.
Yeah, because called out, like, how do you know who is an angel investor? Like you don't even know.
Don't put on the LinkedIn. Yeah.
Exactly.
Yeah, that's a good point. I think also like I have also this kind of like observation that one more thing that founders need to like understand about VCs is they need to understand the mechanics, how it works, that they have their own funds coming in, that they have certain periods when they deploy money, when they have certain agenda for their fund, what do they invest in. And I think that's something like a lot of founders just like skip, because sometimes founders come to us and they're like, oh, do you guys maybe have any investors for our project? And like this is homework that you need to do. You can easily identify the VCs that are in your vertical, in your stage, who are recently, I don't know, closed a new fund for them. Like there's so much stuff that you can do, and founders don't even think about it too much.
It's an interesting point. I would even argue with that, but I haven't quite yet made my mind up about it, because on one hand, like there is fundraising, and you know how like there's a sales technique, like you should be always selling, always be closing. It's like always be fundraising for the founder, because you don't start fundraising when you run out of money. Like it takes time to build those relationships. But at the same time, that like the whole purpose of founding a startup is building.
Building,
and that takes so much time. So why would you spend more time on learning about venture capital if like you could be spending this precious time on gaining more traction, which will get you to securing those funds? But again, I don't know exactly like where I stand, because a good CEO, a good co-founder, like they need to know how to fundraise, because they can make a mistake. And they can go with a VC, like they need to understand the basics, exactly like you said, that it is smart money, like you need to be really strategic and cautious about it. Oh, one other point about sort of the misunderstanding bit is that it's not only about the valuation. Because a lot of people, and when I think like, okay, like if I found something myself, like obviously I wouldn't want to give up a lot from my pie, but then like there are other clauses in the term
Of
sheets,
course.
liquidation preferences, like
100%. Yeah.
board rights, there are other rights that concern whether, like how much
Of
power
course.
an investor has. And it's also very important because you can, like, if a VC offers you a very good valuation, but then they're being very intrusive
Yeah.
about it, that might
Exactly.
not end up well.
Exactly. And sometimes, like in case it was like YC and this kind of like, institutions, the valuations are lower than you might get somewhere else, but the value that you actually get with this money is crazy.
Yeah.
So it's yeah, it's a super good point.
Yeah.
Okay, so the next one I have is, can you share one memorable startup from your career that you think is, when you think about it, you think this is why I do it, like something that stuck in your memory because it's like super outstanding.
You would be surprised, but it's actually a fintech company.
Okay,
But there
fintech.
are no that there are many from the health tech, from the wellness, even marketplaces. Like there are some founders that definitely I keep in touch with, and I'm super curious. Like
Okay.
what's gonna happen? I'm sure good things only. But
Yeah.
yeah, there is this UK fintech company.
Okay.
It's operating in the consumer credit space. Very controversial one.
Consumer credit, as in like buy now pay later. What?
Yeah,
Okay.
that kind of thing.
We don't disclose the name yet.
Um, Not
We
yet.
can skip. Yeah.
Yeah, not yet. But essentially, they are so impact driven, and I've spoken to the founder a couple of times in person.
Yeah.
They come from a very relevant background where they've experienced problems
Problem.
like this,
Hmm.
and they are growing like crazy. They've never raised funds before, like
Okay.
they've never raised. They are EBITDA positive. They are growing like crazy. The founder is flying back and forth in Europe because
That's
he
cool.
is just so switched on. And it is, frankly, it is the space that I know nothing about.
Yeah. I mean, fintechs.
But it is about the people that for sure I'm like, wow, like they're gonna go so far. There's also another cool company. It is a marketplace like in the beauty space.
Okay.
Again, not something where I worked.
Yeah.
But the founder is super driven, working like crazy, and he's just so passionate about it.
Nice.
Another one, the founder comes from Oxbridge, and they're building this extremely techy, sciencey model to decrease essentially the bacterial infections in hospitals,
Okay.
because this is one of the most painful problems after operations, is that you get the
The
infection
infections.
and there is a high risk of being operated again. And if you're in
More.
high risk, like chronic diseases, age related,
Yeah.
whatever, it actually costs, not only it is
The health.
harmful
Yeah.
to health, it actually brings so many costs for the healthcare system.
Okay.
Like if you're thinking about the healthcare system, you want to, well, we can dive into the topic of proactive reactive care, but we're probably going to stay
Yeah.
here until tomorrow. But the an important thing in healthcare, right? Like if there is an operation, you want to get in at the right time, treat the person, and reduce the number of days that they spend on a hospital
Mm.
bed, because that relates to the costs on the whether on the person or
Yeah.
insurance company or the healthcare system,
Interesting.
like for example if it's tax based like in the UK or in Denmark.
Yeah.
So those kind of things. And
Cool.
it's yes, some of the founders. So I wouldn't say that it's a specific
One.
niche or
Yeah.
technology that I'm like, wow, and whoever is building in it,
Yeah.
I'm like super passionate about it. No, it's actually very different people, ages,
Yeah. Impact.
backgrounds.
Yeah.
And I met some at some point in my life,
Yeah.
and I'm just really hooked. It's like I'm watching a series.
Nice. That's interesting. After meeting this kind of founders, do you consider doing angel investment yourself or no? Because I myself I considered at some point, but I realized like when it comes to angel investment, you need to just to give money and forget about it. Like even if it's like 5K or whatever. And for me, it's like very difficult because I'm trying to run the numbers. Okay, so what's the potential of it, and things like and it's very difficult. Like I've talked to other angels and I can't get the same pace like they when they just give money and like that's it. Is it something that you considered or not yet?
I am considering it. I'm not quite there yet,
Yeah,
but
same.
I feel like it's again it's something that once you do it for the first time, it
Yeah,
gets easier.
exactly. It's like fundraising, right? Yeah, that's a good point. Yeah. Okay, so the next one is on InterSystems as well. So InterSystems is a CVC, corporate venture capital. Can you share how it differs from classic venture firms? And do founders understand that it's different? Like a lot of founders, I think, well, my assumption is that they don't really understand that CVC is pretty often irrelevant to what they do. Is it the case? How do they, in general perceive it?
You no, you're completely spot on here. Maybe let me quickly introduce
Yeah,
InterSystems.
perfect.
So InterSystems is a tech company. It was founded in late 70s in the US,
Oh,
and it is a huge company with presence in over 80 countries on
yeah.
all continents, and we have solutions around data interoperability, AI deployments, etc.
Okay.
And we've been running the InterSystems Corporate Venture Fund for a couple of years. And to answer your question, it's a new thing as well,
Yeah.
and the founders don't understand it. I mean, some of the CVCs don't understand them themselves,
Yeah.
because I wouldn't even put it like there is a model for a VC, which is sort of GP LP structure,
Yeah.
and a CVC, which is something else. Each CVC is very, very different.
Okay.
And every major tech company has one in
Yeah.
some shape or another. For example, it could be in the form of a startup program. Actually, our
Yeah.
venture fund falls under the startup program. We also
Okay.
have an accelerator, and we have a growth toolkit, because we want
Okay.
to support founders sort of from early on to
Growing. Yeah.
where they need some additional resources for scaling. Yeah, and some CVCs, they do not have a separate entity, so they invest off the balance sheets.
Okay.
Some of them do, some of them are hands-on. Like
Okay.
I would say
So it depends.
it,
Yeah.
it yeah, it depends. No matter how much I hate this answer, but what I'm gonna say, I think one common feature is that as opposed to classical VC model, CVCs are not generally seeking the next unicorn.
Mm,
There
okay.
is no LP base
Yeah.
that puts this pressure to return on
Okay.
investment,
Yeah.
right? It is the major. Well, it's still important, like you can't invest and you can't put sort of the profits of
Of
the
course.
company
Yeah.
into something that you don't believe in that's
Of
going to
course.
grow. But strategic alignment is super important. And if you're talking
Yeah.
about a tech company that has a CVC, it's about an alignment with the technologies. For example,
Yeah.
startups that we support, they usually have needs around data
Yeah.
interoperability. So yeah, so there are very different models how
Okay.
CVCs operate, and it's important to find this out, obviously, before you even commit to the call, because why would you waste the time as a founder, right?
Yeah.
But it can be quite challenging also to find information.
Of course.
And for example, our model, we provide non-dilutive and dilutive funding, but we always start with non-dilutive funding.
Okay.
So you can think of it as a grant
Mm-hmm.
in order to test that strategic and technical fit,
Okay.
so that we both mutually understand that this is the strategic and long-term partnership that we want to pursue.
Nice.
And yeah, I think I love it. I absolutely love it, because it is very founder friendly, sort of no IP claims, no rigid
Of
timelines.
course.
We are essentially saying, like, look, if you are, and like that's a big if that founders need to answer. And I always highlight this because, again, nobody wants to waste their time.
Of course.
Like, like spending time on due diligence if the startup is not really interested.
Yeah.
It's not really nice.
Yeah.
So yeah, if a startup sees the potential, and InterSystems has great presence in the NHS, so startups that are building in this space and are
Yeah.
looking to sell into the NHS, like integrate or in some form,
Yeah.
there's usually a very strong strategy, and obviously they're working with a lot of data. There's a high chance that there is going to be a fit. Whether this is the right time, again, another important
Depends. Yeah.
question to answer. So yeah.
Nice. And in the pipeline, do you often see just, random irrelevant deals because it's a VC, or is it like more of a, sharp towards what you guys are investing in? Is it
I
a mix?
I think it's I think we're pretty good in terms of
Amazing.
structuring the deal flow
Yeah.
to make it relevant. Like we don't
Nice.
get. I mean, how if you look at the deal flow generation in a general VC, it's a mix of inbounds,
Yeah.
referrals.
Yeah.
There are startups that you scout yourself,
Yeah.
whether it be through events or again through your
Yeah.
network, and things like this. So irrelevant deals you get from inbounds.
Inbound.
Well,
Yeah, of course.
most of them.
Yeah.
And again, we are not we are not Sequoia in this world to get this kind of volume, but it's actually really good because
Nice.
we can be quite tailored with it. But of course, if I see there could still be more in the sense that it's not the right timing, which
Yeah.
is completely fine.
Of
But
course.
then we can collaborate in other
Of
formats, whether
course.
it be growth toolkit or accelerator.
Nice, of course. And in terms of just the last bit on this one, in terms of the decision making and analysis, is it like differs from the VC as well? I mean, despite taking into account data interoperability, capacity, but in general, like the decision making differs or not too much?
For us, it does. Well, I would say it does in general because you take into account that strategic fit,
Yeah,
right?
yeah,
Like
yeah,
as
yeah,
I said.
exactly.
But also because we start with non-dilutive funding,
Yeah.
we don't have to go into too much of that
Okay.
depth. It is only when we consider equity investments that
Yeah,
we would, of course,
that's what the diligence comes
go
in.
full in. Yeah,
Yeah.
but we still do like due diligence reports, which is
Okay.
something that I hold dear to my heart because again, you learn so much from this,
Yeah.
and so much about the founders and the technology and the market.
Yeah.
But the decision making, I feel like on top of seeing it as a great opportunity in the sector,
Yeah.
you are adding another layer for that strategic fit.
Yeah. Yeah, yeah, of course. And would you say if the founder, like, I know the answer for that question, but for the audience, if the founder gets rejection from the VC, is it worth getting back in touch and staying in touch with the VC after the rejection?
I would say yeah.
Yeah.
Yeah,
Okay.
like I there are not many founders that I say pure no to. Well, simply because I try I
Get
try to be
feedback.
quite smart about my deal flow.
Okay.
To make myself in the position where like people who you speak to,
Yeah.
like there is some kind of potential. But if you're at the stage where you're rejected without even speaking to the investor,
Hmm.
I would say it doesn't like you're still managing some kind of relationships with other
Of
investors and
course.
stuff. You're doing some reports,
Yeah.
on how you're doing.
Yeah.
So it wouldn't hurt to, and again, that actually comes from my experience
As a
from
f-
working for an
yeah.
investment infrastructure where we helped founders raise capital. It's
Okay.
always, like it's it's important to nurture those relationships. And
Yeah.
if it is a no from an investor now, but they see that for 6-8 months you've been following up every 2 months and you've been showing some kind of growth,
Yeah. Exactly.
you change your mind clearly. Like if
Yeah.
they're amazing results, obviously you wouldn't send like a fintech deal to a verticalized medtech VC fund. Like there
Of
has to
course.
be there has to be a fit.
Yeah.
But I would say yes again, and that comes from my experience of
Yeah.
helping raise money, helping others raise money, and now being on the investment side.
Yeah.
So yeah, for me, I try to investors have to stay humble as well. Actually,
Yeah.
what I wanted to say is that no investor would know as much about your startup
As the
as a
founder.
founder.
Yeah, that's a good point.
Like if
Yeah.
investors are being arrogant too,
Yeah.
that's a red flag as well.
That's a good point. Yeah, actually, if they get too much into the decision making and like kind of dictate what to do, it's definitely a red flag for investors. Yeah,
Yeah, I
agree.
mean, I would say there are two schools of thoughts when it comes to how you manage your portfolio, whether you're being active or inactive,
Yeah.
and there are proponents for both of these sides,
True.
like how hands-on you should get.
Yeah. But not too intrusive, I think.
Yeah, yeah,
Yeah.
yeah. But then, what I was gonna say.
Yeah, I think we covered it
Yeah.
pretty a lot. Yeah, no, definitely it's worth staying in touch if you know, the timing might be wrong quite often. So it's definitely worth to stay in touch unless you had like a, like sharp no, then it's always worth, staying in touch and updating.
Yeah, and investors give feedback too.
Yeah.
Like it's again, and if you're not managing a very big fund where you are very well, I would say VCs are always limited on resources.
Yeah.
Again, due to the structure of how VC works, like
Yeah.
management fees and
Of
carry
course.
and stuff. But like I would always give feedback.
Yeah. Yeah, no, that's a very good point. Yeah. Okay, so the next one I have is a bit related to what we do at Yotewo. So the question is also pretty generic. So you meet hundreds of startups, hundreds of founders. Do you see them facing this challenge of hiring early stage? Would you say?
100%,
Okay.
especially post seed stage. So when you've raised seed, you have sort of the core team of founders, maybe some other operators or
Yeah.
software engineers. But now it's time, like you either validated the product market fit,
Yeah.
or like you have a very strong potential to do that in the very near term.
Yeah.
So this is when you expand your team in order to double down on it, and go full steam.
Yeah.
And I feel like this is a very crucial phase, like probably more crucial than at Series A, but I'm happy to be challenged on this, simply because you're still operating a very small team.
Yeah.
You don't have the time or resources
Yeah.
for the best talent. You cannot always compete with tech companies, or
Yeah.
in most cases, you cannot compete. So you need to find people who are passionate about what you're building, because you buy into the vision, but also you cannot really afford a high turnover. Like if you hire
100%.
someone, you are as a founder, or maybe if you have a VP, like if you're operating like
Yeah.
10, 15, 30 people, you are taking a lot of time from your standard duties
Yeah.
to educate that person, to onboard them properly. And if they leave in 3 months,
Yeah.
like that costs you so much runway.
100%. 100%.
What do
Yeah.
you think?
Yeah, I 100% agree. I think especially the seed stage is a very tricky one, because at the seed stage, people can't go at the scale of Series A, let's say, and they can't hire like a lot of people in house. But at the same time, that's the point when they already should have some PMF and should be still scaling in terms of the product. So it's a very tricky point where a lot of people, they overhire, or they hire like super top engineers, or they just hire wrong engineers, and that brings them to just spending a lot of money on it. And I've heard so many stories from VCs when they actually just run out of money because of that, and that kind of fails the whole thing, when it shouldn't be like a huge pain. It should be pretty solvable. And I think that's mainly because they just don't find the right people. They're just simply like a mismatch with the right people.
Yeah.
Yeah.
What department would you say is the most likely to be overhired in? So what kind of skill sets?
That's a good question. So I think definitely engineering department, because they're super expensive. Like engineers on average, they are more expensive. Like if you hire them from the market, they are more expensive than salespeople, I think, on average. And the problem is that with a lot of you see, especially if you're a non-technical founder, you might get really confused when you hire engineers, and then you don't have a technical background, so you don't know the methodologies and the system to manage them. So you can actually overspend so much money on it if you're just managing them wrong.
Yeah.
With salespeople, it doesn't really happen. Like it's pretty clear. Like there are KPIs. If they don't perform, you like give the infrastructure. They don't perform. You can see
There's
it.
also sort of, it's how you get compensated as well,
Yeah.
because sales, like they
Yeah.
have a
Yeah.
commission
Exactly.
based
It's pretty
structure.
straightforward. Yeah. And when it comes to the product teams, especially like to like product designers, to engineers, to I don't know, AI engineers, it's very complicated for founders, especially who are non-tech. So I would say, yeah, like especially seed round, I think, because pre-seed is somewhere where you just do the very first hires, and then Series A when you do like more of an in-house hires. So seed round is the most tricky, I think, for that. Yeah,
Yeah. And
that's
I think also people who get hired like into startups, they also understand that they might not stay too long.
yeah,
Like I've gone through several cycles where people would get fired, because
yeah,
it's the right sizing,
of
how they
course,
call it. So, but which is a red flag for them. So it's
yeah.
even more challenging to hire, like to persuade those
Exactly.
people
Yeah.
to start.
It's like, yeah, it's tricky from both sides. Because I understand startups, they obviously they need to stay agile as well.
Yeah.
But yeah, not everyone from the market that wants to go work for a startup is ready for that. So yeah, it's an interesting vertical. That's why we're working in it.
Yeah.
Okay, so the next one also pretty generic. What are you excited about in tech that you think will grow in the nearest future? Just as a maybe vertical or some technology or some, I don't know, just something.
Well, it's not going to be a surprise that I'm going to talking about healthcare.
Yeah, I was expecting
Yeah,
it.
again. But recently, I've seen. I don't know whether it's sort of on the rise or it's just a coincidence that I've seen many deals with that. But I got really excited about it in the last couple of months, so
Okay.
it's a new thing.
Yeah. Okay.
And it's about clinical decision support. So
Okay.
automation and the use of AI in clinical decision support.
Mm.
There are big problems in the healthcare of every developed and developing country that there is a shortage of staff,
Yeah.
doctors, nurses. There is a problem of, well, it's not a problem, it's really how healthcare has been formatting over hundreds of years, that you treat the problem, you don't prevent it.
Yeah.
And we are now shifting to preventative care. There are models of reimbursement that support
Yeah.
that. For example, value based care,
Yeah.
when you pay if the drug works.
Yeah.
Therefore, there are trends in pharmacogenetics where you're able to predict different drug responses, like so many things. Like I've
Yeah.
just mentioned like 5 topics that are,
Yeah.
well, interlinked but quite different. And there are startups building in every single niche of that.
Yeah.
So it's super exciting. But clinical decision support is essentially where you get the tools in order to facilitate decision making from the clinician perspective, that you're
Okay.
able to diagnose people with more accuracy or speed. It can be, well, it can mean different
Right.
things, like where you're able to prescribe better medicines or better dosages, when you're
Yeah.
able to well, there are also like different things such as remote patient monitoring, because a lot of people who get released to home, like they, for example, with the case with the elderly, they fall and they come back with many more injuries, etc.
Exactly. Yeah.
So there are technologies that again support and prevent falls.
Yeah.
But anything, sort of going back to my point,
Yeah.
anything that helps the clinician to make the well, the experience and the treatment of the patients more efficient, safer, essentially to bring impact.
Yeah.
And I think that has, and it's a very it's not an easy sector,
Sure.
because clinical decision support is something that requires regulatory approval, which can, well, stop
Take
you
time.
for
Yeah.
months, if not years, again,
Yeah.
depending on your technology readiness level.
Yeah.
But it's, and there are many solutions. Again, it's not it's a very hyped, I would say, sector that I'm talking about. Like there are tools such as AI scribes that again help you, because let's say you're a GP and a patient comes sees you,
Yeah.
like usually they have 15 minutes to listen to you, to make some kind of decisions, to report you, and to
Yeah.
type in the report.
Yeah.
And it is so little time that there are, again, tools that help you transcribe the session
Yeah.
and maybe make insights out of it.
Yeah.
So things like
Interesting.
this.
Interesting. Especially, I think, for the post treatment. I don't know if that's relevant, but especially the recent changes that it's going to be more difficult to hire care workers in the UK. I don't know. That might be also the case for AI to come at some point to ease it. I don't know.
Yeah, I mean, it's I think it's a good thing that everyone is aware that there are consequences that we don't even know about that this
Yeah.
like AI can bring into the healthcare sector. And again, you are
Yeah.
like it's not about like it's about people's lives, you know.
Yeah. Yeah. Of course.
It's the riskiest sort of sector to integrate this into
Of
it. I
course.
think it's a good. I wouldn't really be super angry about these regulations. Like it's really really
Yeah.
important. But yeah, I would say although there are many solutions and ideas, and I talk to incredible founders every day who do something like this,
Yeah.
we are very far away
Yeah.
from being, you know, good into it.
Actually. Yeah.
Imagine a tool that, for example, you do a standard blood test, like you and I.
Yeah.
We're young, we do a blood test, you know, everything is fine.
Yeah.
But there could be a tool that could actually detect the risk of developing a blood cancer, and a standard GP may not even like they can overlook this.
Yeah.
So having that integrated into the AHR, like how much more efficient the healthcare will be. It's
Yeah.
incredible. Like when I think about it, I'm like,
Yeah, the potential is huge. The potential is huge for this industry. And would you say the next one is on? Would you say AI is changing the world of VCs as well in terms of how they work?
yeah, it already is.
Okay.
In terms of the, you smile at me like you disagree. So
No, 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 I agree on that. 100% agree. I'm just
yeah.
wondering, like, what are the actual changes? What do you think?
I think it mostly concerns sort of top end of the funnel. Sourcing deals
Yeah.
and doing the initial assessment, like whether to proceed to the first call or not.
Yeah.
Because it can, well, we can analyze again market sizing, relevance of the experience, things like this,
Yeah.
and like Crunchbase, they are integrate, like they
Yeah.
already
Yeah.
have an AI
Already.
feature, which is quite cool.
Yeah.
There are companies that integrate AI into legal building when you are. Again, well, that concerns actually the end of the process rather, but it is there are also technologies that can assess the founder's fit
Oh,
based on
interesting.
their psychological results.
There are
Uh,
such tools already.
yeah.
That's cool.
It's so there are many things like this. There are also very smart systems to
Yeah.
manage your CRM. So I think it's
Cool.
changing. Where not to say that I'm being skeptical about, but it's just, again, rather the feature of the VC as an asset class is that it's all a little bit like hush hush,
Yeah.
that you know
Yeah.
you talk to people, you hunt for the best deals. Again,
Yeah.
you like VCs or salespeople,
Yeah.
like they have to sell themselves to their LPs,
Of
the
course.
ones
Yeah.
who give you money. They have to sell themselves to the best founders,
Founders.
because
Yeah.
the best founders, they'll be shopping around.
Of course.
So you have to convince a founder that they need to take money from you.
Of course. Yeah.
So it is sales through and through. So that's the thing that I don't know how it can be AI'd or
Yeah.
like automated, because it is based on the personal relationships and being
Yeah.
very agile and good with people.
That's true.
What's the best technology for VC that you've seen apart from
That I've seen.
apart from Yotewo?
So I think the main one. Well, I think I haven't seen many in general. I've seen a few CRMs for the VCs which are AI powered and really good, but I think like my take is that the strongest one will be the one that will democratize inbounds to the VCs. So if there will be a product that democratizes how in general that all founders have equal chances to get to get funding from the certain VC, I think that's going to be a game changer. But I think we're super far from there. Super far. But I think that's going to be the one.
Yeah, it's an interesting point that you raise, because again, it can contradict the nature of this, right?
Exactly.
And as much as I think it's like, if there is a very cool startup sitting, I don't know, in a different country that, for example, me being in London, I cannot get hold of them, like,
Yeah.
but I still want that intro, like I still want to talk to
Exactly.
them. So having a bridge like this
Yeah.
is amazing, but how can you manage this between AI, but also having to talk to these people, like the
Yeah.
volumes?
Yeah.
But I think at least what we I think both agree on is that this automation and ingestion of AI into workflows allow, well, or at least I hope will allow smaller teams, VCs, manage bigger capital.
Yeah, that's actually a good point. Yeah, no unnecessary like admin stuff.
Mm.
Yeah, that's a good point. That's a good point. Okay, and I think just the last question to wrap up. So that's a super personal one. If you had to launch your own startup tomorrow, what would it be?
You have me there. Um, actually, in the last almost 2 years, 1.5 years, what I've been doing, and indeed it is very personal, I've been kind of trying to get this habit of noticing problems that concern me. Not
Okay.
just like, oh, this is annoying, but actually, like, hold that thought, write it down, and then I've been writing down different problems
Okay.
that I myself personally like face on a daily basis.
Yeah.
And then you look at these problems and you analyze, like you brainstorm
Yeah.
which one of them are actually worth solving.
Yeah.
Now I'm lucky enough to be a healthy person.
Yeah.
So I wouldn't say like, there is this big issue that I
Yeah.
that I want to say solve, but definitely if I'm building it in the health tech space,
Of course.
probably something on the consumer side, simply because, or if I'm lucky enough to find a very science oriented co-founder, then probably I could bring in my operational, like
Yeah.
VC business development expertise. But there are certain so that habit of just noticing problems, I
Yeah.
think has been quite useful for me, because it just expands like your vision, like you're being more agile, you're being more creative.
Yeah.
I think whether you want to found something or not, like I would definitely recommend doing that.
Okay.
But in terms of, which problems I see as essential to solve, and the ones that I sort of keep dear to my heart,
Yeah.
would be around, patient sort of proactive care and preventative care.
Yep.
But that, the challenge with this is that it requires a huge behavioral change. It's
Yeah.
not only about creating the solution. Like we have, I don't know, there are so many gadgets like and devices, like Oura Ring tells you that you need to stand up and do the exercise.
Yeah.
I can't say that I've been doing it.
Yeah. It doesn't change
Like
the behavioral pattern. Yeah.
exactly. Or like even your iPhone tells you that, you set up your sleeping schedule, but you're watching a very fun episode. Would you turn
Yeah.
it off?
Of
I
course.
wouldn't say so. So, like it's that kind of paradigm shift that's
Yeah.
really necessary, and so many people talk about it, people from healthcare, like public healthcare, pharma. So I can't figure out like something that can, well, and many people can't, that can change that. But yeah,
Yeah.
I'm thinking along those lines. But again, as I mentioned previously, that sort of anything around clinical decision support that can actually help clinicians, doctors that are just very big people, like what they're doing is,
Yeah.
I have so much respect for that, and that the healthcare systems cannot quite work in the way that, can meaningfully support them
Yeah.
and ensure that continuation of care through different stages.
Yeah.
So all the technologies around that, if I get an opportunity to, like to join a team or to found something like
Yeah.
this and bring impact, that would
Amazing.
definitely make me happy.
Amazing. That's a great answer. I think that's about it. It was super interesting, super insightful, super fruitful conversation. Thanks so much for coming, guys. I'll leave all the links in the description to the video, links to the Mariam social media, to InterSystems. So everything will be there. And thank you very much for coming.
No, thank you.
Thank you.